the Business Finance Podcast, brought to you by the Best Finance Group. New episodes every Friday. Hello and welcome to the Business Finance Podcast. He's Jack Seymour.
He's Phil Murphy.
And welcome to this week's episode. And now this week, continuing our series of videos about acquisitions. We talked about MBOs last week.
Yeah, we did.
On the heels of that, we're now talking about MBIs, management buy-ins. So Jack, we're going to run through the most commonly asked questions that we get, similar to last week. You're going to give us your expertise. And hopefully it'll be useful to you out there wherever you're watching and listening from. So first question, simply, Jack, what is a management buy-in?
Yeah, absolutely. So a management buy-in differs from a management buyout, as people will see from our podcast. So management buy-in is when new stakeholders will come into the business and buy shares or assets, or even both, of the business. Okay. So external parties buying in to the business.
So how does an MBI differ from an MBO?
So an MBI is where external stakeholders will come in and buy a share or acquire all of the shares of the business. An MBO is where an existing shareholder will simply buy shares or assets in the business. So there's quite a big difference between them. Both bring in their own advantages and disadvantages.
Okay. Now, what are the advantages and disadvantages of management buy-ins?
So commonly, the advantages of an MBI are there's a fresh perspective, so new ideas, new growth plans, and quite commonly, if a business owner is selling, they founded the business and they've reached a ceiling where they can't grow it anymore because they've run out or hit their skill set. So by bringing in new stakeholders and shareholders, that can bring in new ideas and really grow the business. So I'd say that is a major advantage of an MBI. Some disadvantages could be some disruption or lack of confidence from the staff because it's a change and it's new perspective. However, that could be seen as an advantage as well, and smoothing that process out is really, really key because having the staff on board, they're the ones which are doing the day-to-day work commonly.
Yeah.
So yeah, those are some advantages and disadvantages.
Next question, what is the typical process involved in an MBI?
Yeah, so the process would be a business owner will come to us and they're looking to sell, or a business buyer will come to us looking to buy. They'll have an idea, so they'll get a valuation done for the business, and then once the buyer and the seller have had a verbal meeting and confirmed on a sale price, then they'll draw up a document called Heads of Terms, or abbreviated HOTS, and this details how the deal is going to be structured. Both parties will sign this, and then we'll be formally engaged to raise finance for the transaction. So your Heads of Terms, then your finance, and then finally your SPA, which stands for Share Purchase Agreement. And an SPA is drawn up by lawyers, both parties having their own independent lawyers, similar to buying a house, I suppose. Once the share purchase has been signed and agreed on, then completion can take place.
Very good. You've done this before, haven't you? This is one we like best. What funding options are available for MBIs?
Yeah, absolutely. So there's a range of funding options available for an MBI. This can be through a leverage buyout. So we'll look at what the business owns, the assets it owns. Yeah. We can use asset-backed lending to raise the funds through that. Or it can be done through private equity, or through a what we call vendor finance, which is essentially the business itself selling itself back, which we can assist with. More commonly than not, the day one payment will be a percentage. So typically 60% on day one, followed by 40% deferred. That's a common structure. Doesn't always work for every business, but that's a common structure which will take place in any business acquisition.
And when you say asset-based lending, just for the viewers and listeners, which different types of assets can we leverage to help?
Good question. Yeah, so it can be asset finance, it can be invoice finance through the debtor book, it can be a term loan, it can be against stock, it can be against property.
And cash already in the bank?
And absolutely, cash in the bank could be utilised. Speak to an accountant and get some tax advice around this, because that can really be beneficial to help an acquisition. because if there's a large amount of cash in the bank, this could be utilised to aid the day one payment.
Next question, what are some common challenges that you find when assisting with MBIs?
Yeah, so common challenges are the management team coming in and ensuring that the staff are on board with the future vision. A handover period, so of the current directors or shareholders exiting the business and how this is managed. If they're walking away on day one, if they're staying in place for 6 months, 12 months, or even 2 to 3 years, I've seen. And how this is processed, this handover period is really in the best and most efficient way possible for the new stakeholders and shareholders to continue the business. Also, the management team that they're bringing in, is it that they're going to be running the business? Is it, as the buyer, or is it that they're going to put a managing director or a general manager in place to run the business for them? And those individuals or individual being really have the necessary skill set and expertise in that industry to run the business. That's what I would personally say is paramount, because having industry experience is absolutely fundamental. The numbers are only a result of the actions in the business. And a common mistake I would say, in my opinion, that I see is people look at the numbers, say, well, that business makes £250,000 a year, I'm going to continue letting it run £250,000 a year and I'm happy with that. But they're not drilling down into how that business has made those profits and the necessary skill set. Is it that that business actually is owner managed? Where are those contracts coming from? Was it the founders that won those contracts? And if they stepped away, what would happen with those contracts?
Do they hold the relationships?
Yeah, those relationships as well. So I'd say that is some common challenges which I see in MBIs, which absolutely can be mitigated and overcome.
There's always an uncertainty for the staff, isn't there? What's going to happen to us? What's going to happen to our job? So it's important to get that buy-in. At the start from the new owners. Staff. How long does an MBI typically take, would you say, in your experience?
So every MBI is different. I've done MBIs in as little as a month. I've done them as long as 12 months. Typically, they take, I would say, on average, from 3 to 6 months. It's all dependent on the funding, which we can assist with, of course. There's solicitors and lawyers involved. Are they motivated to get the acquisition done? Are they working on a fixed fee, or are they working on a per hour fee? And this may change or could change the speed of which the acquisition takes place. And finally, what is their expectations? Do you have a confirmed date to work towards? I always say, when those heads of terms are drawn up, ensure that a target date of completion is put in there. It's not concrete, but what it does do, it focuses the mind of both buyer and seller and puts a stake in the ground for a date to work towards
that date.
Absolutely.
That's great. Well, that was very well answered as usual. Thank you very much for that, Jack. Okay, Jack, we're now going to go on to our deal of the week. You ready for this one?
I'm ready.
This was a cracker. So a client was referred to me. This was post-acquisition. So the client had bought a business, I think it was around November last year. It was a company that supplies different products to large construction companies in the Northwest. Now, very, very switched on lady, very, very good entrepreneur. She'd been working with a gentleman called Chris Spratling from Chalk Hill Blue. And if you don't know Chris is a business growth and business exit specialist. I'm actually just reading his book now, which is an Amazon bestseller called The Exit Roadmap. And I would suggest you read that if you're interested in exiting your business. So she was working with Chris, and you could tell she was working with Chris. All the financials were there, readily available. Now, what had happened when she initially wanted a loan to service some larger orders, so she's got corporate clients and they want to order more and more and more. She needed some cash flow to support her through that process. She'd gone to a high street bank. 2-3 months later, the relationship manager's disappearing. She can't get answers. She can't get a conclusion. Are you going to do this or not? Very, very frustrated. She then went to a challenger bank.
Okay.
Similar sort of process. Now, she had a debenture in place from when she bought the business for the previous shareholders, and she mentioned this to the challenger bank at the start. Okay, so they were fully aware of it. Again, 3 months, still trying to get an answer. It went right the way through to credit, and they said, oh, there's a debenture, and they couldn't get comfortable with the debenture. So she was very, very frustrated. That's 6 months, trying to grow this business, and that's 6 months. So she came to us, she was referred to me. We had all the documents straight away. We went to market, we brought back 2 very, very good options, unsecured loan, £150,000. The first one was offering it over 30 months.
Okay.
Ideally, she wanted it over 60 months to keep those repayments as low as possible. The second one was taking quite a while to go through credit, but we just said, hang in there, don't just take the money, just wait, let's see if we get this other offer. She finally got the offer through.
Brilliant.
Funds in her account from initial inquiry to speaking to me, 10 days, £150,000 in her account the day before she went on holiday to Spain. So hopefully she'll be raising a margarita or 2 to me by the pool. She's very happy, a successful case there, deal of the week.
Brilliant.
I'm really happy with that. So it shows the difference, doesn't it?
Yeah, and that's a fantastic deal of the week. Well done, Phil. Good work, because I suppose that's one of many reasons why people use us, isn't it?
Yeah, well, 6 months, that's the difference between having access to the whole market and just thinking, well, I'll try the high street bank first, and then maybe I'll try a challenger bank. If you'd have come to us, we'd probably say, well, actually, let's just go to the whole market and we can cut this process right down. I mean, 6 months is extreme, but it's not uncommon.
Yeah.
So she's got the money now to grow the business. Everyone's happy, and I'm sure we'll be working with her again. So there you are. That's our deal of the week. Anything to add?
No, I think that's fantastic. Yeah.
That's us done for another week. Thank you very much for all you watching and listening, wherever you're watching or listening from. Just want to give one big shout out to the football team that we sponsor at the Best Finance Group, Panath Town U13s. They were bottom of the league last year, and this year they took it right to the very last game. They had to beat our rivals who won the league last year. Whoever won the game, it was a title decider. Whoever won the game won the league. We won 1-0, and my son was man of the match.
Oh, fantastic.
So I've been in dreamland ever since. So yeah, just a shout out to Panath Town U13s. Thanks for joining us, and we'll see you next week on the Business Finance Podcast. Thank you. Thank you for joining us. If you have any commercial finance requirements, please contact us at thebestgroup.co.uk.